Welcome back, everybody. The buzz over the weekend was about Deepseek and their new R1 large language model, which apparently was trained for a mere $6 million with performance that was better or at least on par with OpenAI's O1. So clearly the internet was totally rational and thoughtful and not at all dramatic about this news, right? Well, no, because the responses varied from people saying that NVDA and all Mag 7 stocks are doomed, to others saying that this is the catalyst for AMD to break out, to even others saying, well, it's obviously all a lie, so there's nothing to worry about. But the market, at least for now, disagrees, with companies like NVIDIA down over 10% in pre-market trading already. So in this video, we're going to break down what Deepseek is and what they released, what makes it important and notable, and then what it means for AI-related stocks. So let's go ahead and get started. Today's video is going to be a little less polished. We'll just kind of talk through it, and I'll just get this out of the way now. This space does get very technical, and so if I say something that's not technically correct, or maybe I don't really communicate the nuance of it, feel free to correct me down in the comments, and we'll all learn together. Okay, so first question is probably, what is Deepseek anyway? Well, it's a Chinese AI company / research lab that develops large language models, so something similar to what we understand OpenAI does. But in this case, their model is open source, similar to what Meta did with Llama. And back in December, Deepseek released their V3 model, and benchmark tests showed that it outperformed Llama 3.1 and even matched GPT-4o and Claude 3.5 Sonnet. But what was notable about it is that it was trained in about 55 days at a cost of under $6 million, which would be significantly less resources than others have used. And so obviously this raised a lot of questions about how exactly they did this, especially with the supposed export restrictions to China, where NVIDIA isn't allowed to sell their best performing chips. Now there's a lot to unpack here, and they did go into details of how they got that $6 million number, but it doesn't really include all the previous research and iterations that they might have done, and it doesn't include the cost of the actual GPUs, because they're basically using rented GPU hours in this case, which again, I'm not saying that it's not real. I'm just saying that it may not be apples to apples to what we see in the news when a company says that they're investing X billions of dollars into AI. But obviously, nuance isn't really popular on the internet, so it is what it is. But what they accomplished is definitely notable, and here's why. On January 20th, Deepseek released R1 and R10, their first generation reasoning models that performed on par with OpenAI's O1. And what was interesting is they enhanced model performance with reinforcement learning without using supervised fine-tuning. I'm not going to go into details about what those are, how they're different, but basically it dramatically reduced the amount of cost and time in the process without impacting model performance, essentially by allowing the model to learn more on its own as opposed to with human intervention. But that wasn't the only interesting part about it. They increased efficiency by using 8-bit floating point numbers versus 32-bit, used a multi-token prediction system versus single token, used a mixture of experts or MOE model for additional efficiency, and they compressed key value indices for better memory usage. Plus, they were able to increase the throughput of their NVIDIA chips by customizing core computational units with low-level code. And one of your questions might be, well, wait a minute, I thought they weren't supposed to have NVIDIA chips because of the export restrictions. And yes, that's partially true. They're limited from having NVIDIA's most advanced chips, so what they had were NVIDIA H800s, which are an export-controlled version of NVIDIA's H100. But the Deepseek team was able to get around some of the throughput bottlenecks by writing their own PTX-level code, which is like assembly code for the NVIDIA GPUs. And you might be like, okay, cool, but what the heck does any of this even mean? Well, basically, it would mean that they created a model that was on par or better than the best models out there for significantly less cost, time, and resources by just being creative with the trade-offs in their methods, algorithms, and usage of existing hardware. So in a nutshell, they used the limitations of their situation to figure out ways to be able to do more with whatever they had, which in general is great. But it begs the question about what it means for companies building LLMs like OpenAI, Anthropic, and even Google, CapEx spend for companies like Amazon, Microsoft, and Meta, and then of course NVIDIA's continued revenue growth going forward and current stock multiple. Now, just to get this out of the way, part of the response online was basically saying that because this came from a Chinese research lab, that all of this is fake, and they're lying about the cost, and they're lying about the number of GPUs they have. And look, to me, none of that is really interesting or even valuable to think about, because at the end of the day, if it is fake, then none of my investment thesis in any of my companies has changed. So I'm just going to evaluate it based on assuming that it's true and understanding what they did and what might change in the future because of what they found. So with that that being said, what is the big idea about Deepseek R1 that has people and markets going a little crazy? Well, it's the idea that a large language model can be trained and run on a much smaller footprint of compute power, with some skilled engineering and creativity in the model approach and customizations in the lower level code of the GPUs. But in terms of markets, it has people questioning whether or not big tech companies have allocated all this capex spend well, or if they're just huge bloated organizations burning cash. And if a company like NVIDIA is now extremely overpriced based on the fact that their hyperscaler customers are going to stop spending money on new, more expensive GPUs. So yeah, that is a lot to unpack, and let's try to do that. Now let's start with the companies that I think are going to be the most impacted. And these are going to be companies that actually create LLMs as their business model, specifically closed source LLMs. So I'm talking about OpenAI, Anthropic, and to a lesser extent, Google. Is any company that has a core business model around a proprietary LLM, to me, this is a major disruption for them. Like, is OpenAI worth the amount of investment that companies have already put into it now that we've seen what Deepseek can do? I'm not really sure, because Deepseek has created a good performing model for cheaper and offering it for cheaper. And because it's open source, it means that it's going to continue to evolve and get better and be used by more and more competitors. So to me, this is a definite headwind for companies like OpenAI and Anthropic, because not only is DeepSeek a competitor, but they're also going to spawn more and more competitors with their open source model, to where having an LLM is going to be a commodity thing, right? Which I think we knew was going to happen from the start. So companies that are leveraging them and not making it their core business, I think will benefit. But companies like OpenAI and Anthropic, where that really is their core business, at least that's my understanding of their core business, to me this is a major issue, because the barrier to entry to get similar model performance has just become much cheaper. Now, a company like Google, they may be partially impacted because they have a proprietary LLM, but at the end of the day, their value proposition is much broader than that. It's about integrating that intelligence into their existing products and services. Plus, they have Google Cloud, where they're actually providing the compute that other companies will rent. So for Google, even though it may be a slight negative to their proprietary LLM, I think overall it's a net positive for them as a company, because they'll be able to take any advancements that they learned from DeepSeek and apply them to their own model iterations where it makes sense, as well as any efficiency gains from doing that. Now next, let's talk about Meta, who is also creating LLMs, but in their case, Llama is actually open source. So to me, this is positive news for them, because it's a technical advancement that they can integrate and apply into future iterations, and it pushes the space forward for them. And it's another win for open source models, which anyone can use and keep iterating on, which Meta has already embraced. Plus for them, they're not actually in the LLM business. They're digital advertising and social media business that's going to improve as AI models and distribution improve. And it also means that they could potentially reduce future CapEx spend, or maybe keep the same CapEx spend, but get more efficiency or more output from what they're doing for that spend. And this is something that people have been talking about online, and they just assume that that's what's going to happen. I'm a little skeptical that there's going to be less CapEx spend, and we're going to talk about that in a minute. Which brings us to the hyperscalers like Amazon, Microsoft, and of course Google. Now in general, I don't think this is much of a negative for them, because if anything, they're the ones that are going to be providing compute to rent for other companies. And while you may have more companies trying to create and iterate on their open source models, you're also just going to have more companies in general experimenting on using AI models for their business ideas that maybe they couldn't before. So in general, it should be a net positive for cloud providers, because overall demand for AI-based compute should increase. And again, some people believe that these efficiency gains will mean less CapEx spend from the hyperscalers, which means more free cash flow for things like buybacks or dividends. And again, for me personally, I don't know that that's what I expect. I actually think they're going to keep spending and maybe allocate that spend in different areas if they don't want to spend on compute. But I think that we're still at the very beginning stages of this, and thinking that they're just going to stop spending for the sake of free cash flow is short-sighted in my opinion. Which brings us now to the chip makers. Let's talk about the elephant in the room, NVIDIA, because what people assume now is that because these efficiency gains have been kind of sent out to the world, that NVIDIA's multiple is going to crumble, because no one needs to buy these outrageously expensive, high-priced, high-performance GPUs anymore, because they found these other ways to do it. Now, I'll caveat this and all the things I'm saying in this video with only time will tell, and we'll find out together what this all means. But for me personally, I do not think that NVIDIA is going to lose demand because of this, and here's here's why. Buying a cheaper GPU is only part of the equation. You also have to factor in development and maintenance of software to optimize that GPU, networking setup and throughput, and availability of skilled developers and knowledgeable resources, which almost always favors NVIDIA and CUDA since it's the software standard that's been around for a decade longer than AMD's alternative. But the possibility that people are talking about is that demand for NVIDIA's new highest price chips will slow down, or their pricing and margins will decrease since the compute needed to train models is now reduced. Now, these things definitely could happen, but how I look at this problem is what Deepseek has done is great, but we're still at the infant stages of this whole accelerated computing transformation. And ultimately, the goal is not just to recreate ChatGPT's o1 model. There's quite a bit further to go. I mean, we haven't even scratched the surface of what things like robotics, autonomous vehicles, or digital biology will even be. If anything, applying those efficiency gains can help accelerate those fields past their current obstacles. And it's just hard for me to believe that NVIDIA is not going to be a big part of that. I mean, at the end of the day, you can't convince me that Deepseek doing something amazing on NVIDIA hardware is ultimately bearish for NVIDIA long term. Based on what we know right now, Microsoft is still planning to invest $80 billion in 2025, Meta is planning to spend up to $65 billion in 2025, and even the Chinese government plans to spend $137 billion over 5 years to enhance their AI infrastructure, including compute. Now, for Meta and Microsoft, the idea is that it'll be more inference and training related, and people have pushed this as the AMD bull case over NVIDIA in 2025. But again, I find it hard to believe that the best product in the market that's had more demand than supply is all of a sudden going to lose demand as we're at the beginning of one of the biggest technological shifts of our lifetime. And that's even if the focus is more on inference as opposed to, say, training. It's just a question of, do I really think that all this is going to stop because a very skilled team were able to get creative and do something amazing on NVIDIA hardware? Personally, I don't. At some point, I do expect the growth story for NVIDIA to slow, but I said before that I felt that it wasn't going to be in 2025, and that's how I still feel until we get information directly from NVIDIA that says otherwise. But part of the challenge with investing in NVIDIA and tech stocks is that there's a lot of speculation around the stock price, so you'll have a lot of volatility as folks are simply trading it for gains and reacting to whatever news is out there on a given day. Now, it doesn't really bother me personally because I believe in the company and I know why I bought it, but the ups and downs can definitely be tough to deal with, and I think it's something we should expect with NVIDIA and pretty much all tech stocks right now. But one thing that is helpful to me is I just finished the book, The NVIDIA Way, and it's good timing because there are some parallels to what's happening now. Back in 2006, when NVIDIA released their CUDA language, they were allocating a lot of resources and investment to it. And Wall Street analysts were beating down the stock, pressuring them, talking about how it was a bad allocation of capital. And yet, almost 20 years later, it ended up being one of the best and most important decisions the company ever made because it effectively set NVIDIA up to be the accelerated computing standard 20 years later. And Jensen Huang pivoted NVIDIA to focus on AI a decade ago because he saw where it was going. So this wasn't like a flash in the pan thing that they got lucky on. So when I just simply take a step back and think about that, is the most important AI company in the world, whose hardware and software just allowed a talented team to do some amazing things, all of a sudden going to be a loser going forward? I just personally don't think that's the case. But I understand why people get nervous seeing how much they've gone up and how much expectation is priced into the stock. And my point is, at the end of the day, we still have to understand why we bought a company so that we don't get so caught up in what other people are saying about it, especially online, because some people just do it just to get engagement and clicks, and it doesn't mean that it's valuable information that you should make a financial decision on, right? So I would expect some definite ups and downs in the market as it kind of digests what this actually is going to mean. Earnings are coming up right around the corner, so we're going to hear a little bit. I'm sure there's going to be some questions about it, and that should provide more clarity. But to me, NVIDIA and big tech are still some of the strongest companies in the market, and anything that just happened with Deepseek doesn't change my mind on that at all. If anything, it's a good technical step forward that pushes the space ahead, but it doesn't change how I feel about any of these companies. So depending on how crazy the market gets with it, you may see me picking up some shares and trying to get some companies at good prices. So what do y'all think the implications of Deepseek are to the broader market or maybe specific companies? Let me know down in the comments. Now, if you want to see what I think big tech's going to do in 2025, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.